What is up, y'all? We have been seeing some green in the markets. It's been kind of nice. It's been a while since we've seen things pump like this. We are like killing it on the 375 AI play. Obviously, I was just talking about that until I was blue in the face last week, just because it's almost like felt like it was just like freaking stealing basically the prices that we were at last week. That stuff's over 100%. Okay. We had some other plays that are pumping as well. A lot going on in the markets right now. I'm not saying that we are fully back to being risk on, guys, but things are certainly moving in the right direction. I'm going to post this real quick on X to make sure people know I'm live. It's going to be a quick update. Tomorrow I'm going to do more in-depth live stream. 1 second. Who we got in here today? I saw Joe. What's up, Joe? Here to spread FUD? Of course you are. You should have listened, buddy. I don't know if you bought any EAT token, but you would have more than doubled your money since you're saying that it was a scam. Here we go. What's up, sir? What's up, 619? Let's talk about the big news, obviously, is the government shutdown. So this is what's going on here. Says that the Senate actually did pass this forward. It is now moving to the House. So they said the House has not convened since the shutdown began. The Speaker of the House said he does believe they have the votes to get this thing passed. So they're going to get everyone there as soon as possible. Says the timeline's still fluid. Even if the Senate manages to expedite its work and pass the bill as soon as Monday or Tuesday night, which this already did happen, I believe. So the House would then have to reconvene, likely Wednesday or Thursday for their vote. It does go on to say, though, there's several progressive Democrats that are super frustrated with what's taking place right now. There's a lot of people that are really, really pissed that the Democrats are basically giving in here to get the government back up and running. Obviously, the thing that's in question right now is the Obamacare premiums had gone up like over 200%. And they had put a kind of stopgap measure in place to prevent it from going up a lot more during, I think, like a year ago or so. And they had just kind of been pushing that forward, but those were set to expire. And they need to get something reworked there. And that's kind of what's been holding things up. It does say here, too, that Senator Rand Paul, who's a Republican, obviously, is reportedly broken from his party. There's people that are like, dude, don't hold this up. So we have to see how this plays out. It's likely, I mean, looking at Polymarket, looking like November 14th is the likely scenario. You see a 91% chance that this does end between the 12th and the 15th. Of course, that would be this week. Today's the 10th. So what would that, the 14th would be, was that Friday, I believe, if my math's correct. So likely not going to happen until later this week. So we have to pay attention. If Rand Paul decides to hold out, that would be not good for markets, because markets are largely baking this in now at this point. So that should free up capital. We talked about a number of things, how that was creating major liquidity strains across all markets. Obviously, the other thing is we know that we have a lot of spot ETFs that are going to get approved as soon as the government's reopened. We saw a couple get approved, but there's a lot that are just sitting there that should have gotten approved in August, or in October rather, that have been pushed out. So that should happen pretty quickly once the government's back up and running. We had this announcement from Treasury Secretary this morning, Scott Bessent, talking about how IRS now has issued new guidance giving crypto exchange traded products a clear path to stake digital assets and share staking rewards with retail investors. So that's obviously huge. Some official guidance from the IRS on this. So, for your spot Solana ETFs, it's pretty cool. You'll be able to get staking rewards. So I think that should, if anything, attract more capital. We've seen a lot of inflows since the spot ETF, a couple that have been approved, have gone live. There's like another 12 that are sitting there waiting for approval on the Solana side. There's a number of other ones as well that we're waiting on here. The other thing, as news broke today, the U.S. Senate released their crypto market structure bill draft. So that seems to be moving along. That's good news. There's a lot of people that feel this is actually the most important crypto legislation we've ever had. So we are still hopeful we can get this on the president's desk and signed this year. So that would be obviously something that hasn't really been fully baked into markets that I think could be a positive for sure. We're talking about, we've seen a lot of talk today about the upcoming December FOMC meeting. Guys, also, there's a lot of posts there. People are like, there's so much BS being posted right now. Like, oh, the Fed's meeting this week and cutting rates. They're not meeting until December, and there's no guarantee they'll cut rates. There's a lot of people talking about how Stephen Moran, who's one of the Fed governors, he's calling for a 50 basis point cut. He did the same thing in the last meeting. Okay, he's dissented now like every time. We also had one dissent saying that they didn't think there should be a rate cut at all in the last meeting. So I'd say it's very, very unlikely. There's a lot of people, spreading this, saying, "Oh man, we're going to get a 50 basis point cut in December." I would say it's very unlikely. The only way that would happen is if, when the government gets up and running, we see labor reports that if they're really, really ugly. That is the one thing I think that could force Jerome Powell's hand, but that would also probably not be great for markets if the labor market was so weak that it forced a 50-point cut. I would imagine that in the market we might see the 50-point basis cut offset by the fact that people would be really concerned about the economy. So I don't know that it would be good for a 50 basis point cut if that's what it comes down to. Right now, still looking like 69% chance of a quarter point cut. We're seeing that the likelihood of a zero cut 29%. So that has been steadily increasing. I still in the camp that I think we'll see a quarter point cut, but we have to see what the labor numbers look like. We haven't seen a lot. I mean, we've seen reports from privatized companies. We haven't seen the government BLS numbers in quite some time because the government's been shut down. So we don't really know what the job numbers look like. We've seen a lot of reports about layoffs. I don't think it's going to look great, but let's see. Let's see how the market reacts to that. And then, of course, this is the news that's been going around all over the place today. It has to do with the stimulus check. Trump's talking about sending $2,000 out to people that lower, mid to lower income people based on a tariff dividend. Here's him speaking about this directly, actually.
We're going to issue a dividend to our middle income people and lower income people of about $2,000. And we're going to use the remaining tariffs to lower our debt. We're going to be lowering our debt, which is a national. We're going to issue a dividend to.
So his whole thing is, okay, we have all this tariff revenue. He wants to issue a $2,000 check. This is the first time he's actually put out an official number to middle and lower income families, and he wants to take the remaining revenue and pay down the national debt. So, man, I've got a lot of thoughts on this. I'm going to get more into it on the live stream tomorrow. Right now, as far as like this happening this year, 16% chance, very unlikely. I would highly doubt that it'll happen this year. You guys have to remember too, like there's legal proceedings right now as to whether or not these tariffs are even constitutional at all. I kind of look at this as like Trump putting pressure on them. Hey, he'll put another tweet out like, if you guys cancel them, we're going to have to, send back $2 trillion worth of tariff money. I think he's trying to get people on board with the tariffs. And one way to do that would be to send them a freaking check. All of a sudden, all the people that have hated tariffs to this point would probably not hate them so much if they get a $2,000 check in the mail. I think this is putting pressure. I will believe it when I see it. So I get it. I get why the people are really bullish on this. If it happens, if you remember what happened during COVID, they gave out stimulus checks and risk on assets went absolutely parabolic. So I think there would be some of that for sure. You also have to remember though too, people have far more debt right now that I don't know that as much would flow into markets. So people are probably going to pay on their freaking credit cards and make payments on their auto loans. But I would expect, you have $7 trillion sitting in money markets right now. As rates come down, people are going to start moving that money elsewhere to get a better return. And I would think if they know there's stimulus checks that are going to be going out and it's official, I would expect people are going to front run that because they're going to expect that risk on assets and risk on markets are going to go crazy. So I would think that a lot of money you'd see that's been sidelined might start funneling into markets again, leading up to that actually taking place. So something to keep an eye on, but it's one of those things that now I'm like concerned that the market's baking it in more, a higher likelihood of it happening than it actually happening. And then you have a negative surprise and markets react the opposite direction. So we'll see. 619 says he loves tariffs. Yeah. I mean, to this point, we haven't seen the inflation from it yet. Not say it can't happen, but it does seem like, there's more news coming out for like the 80th time that we're close to a deal with India. We'll see. We're seeing that a lot of these tariffs, that he shocked the market with early in the year are coming down substantially, which is what we expected. As some of this stuff gets worked through, how will this play out? And then how will markets react? So it's still a risk, obviously. But oh man, look at that. We are about back above 107,000. That's freaking nuts. So obviously we saw a lot of fear in markets, y'all. We had the government shutdown, obviously. We had the China tariff scare. Then we had the Binance debacle with the oracles, and a lot of liquidations. In fact, not just a lot of liquidations. That's one way to put it. The most liquidations we saw in history in crypto, and it washed a lot of liquidity out of markets, and a lot of people got wrecked. Since then, we've kind of just seen weeks of really negative price action, a lot of negativity around the markets. One of the things I will say, though, with Bitcoin that's really, really promising is that we've seen a lot of whales, OG whales selling, and the markets have really absorbed it. We saw it hold the $98,000, $99,000 price point. It tagged it several times. It's good to see that we are priced back up above 106,000. I think we really need to see to get bullish structure again and see the bulls back in control. We really need to break up to 110 to 112,000 range. And if we do see that happen, guys, I think we could flip back to really bullish structure in markets, and we could start talking about all-time highs again this year, which would be pretty remarkable given where we were just over the last few weeks. The other thing, though, psychologically, I don't think a lot of people have realized is, a lot of talk about the 4-year market cycle, right? And there's people that are totally on board with it, people that say that it doesn't exist anymore. It's about the business cycle. Regardless of whether or not it exists, if enough people believe it exists, at least for a short-term price action, it matters. And I think we saw some of that. We saw all the negativity in markets that kind of reinforced the 4-year market cycle belief. And I think there's a lot of people that sold off that just believe in the 4-year market cycle, regardless of whether it's around the business cycle or not. And I think we had to wash some of that selling out and kind of work through that period there. It seems to me like we are potentially moving past that. It's funny how markets work and the psychological side of it. I mean, trading in general, like if enough people believe in something, it doesn't matter whether or not you believe it. If enough people believe it, it will impact markets. And I think that we saw some of that, with the 4-year market cycle. Now, if all of a sudden we see Bitcoin break up above 112,000, I think you're going to see a lot of people kind of leave that sentiment behind. You're going to see a lot of people shifting to what Raoul Powell's been saying. What a lot of the analysts have been saying is that, hey, it's the business cycle. We see QT ending December 1st. It's likely we're going to see a lot of liquidity entering markets here with the government shutdown ending. I think bullish sentiment could be returning. This is huge too. Ethereum breaking back above 3,600. That was a critical number. The concern is if we broke down below 2,800, we never got there. So we are seeing some price points hit that are some critical levels, guys. I mean, I think if we see a continuation of that, we could see the bulls get back in control. I'm not willing to say that we're there yet, okay? But things are certainly looking better. Solana price point is recovering. They have the major catalyst with the spot ETFs getting approved as soon as the government's back up and running. We have a couple approved. They've seen inflows while everything's seen outflows. I think seeing more of those and then having that staking news from Besant today on the IRS guidelines, that bodes really well for Solana. And when you look at app revenue, Solana's crushing it. They're by far above and beyond everyone else. So I want to talk about a couple of the plays that I have entered. This is one Sistine Research. Highly encourage you follow him. He's had some really incredible calls over the last couple of years. I'll pull up his X account in a second so you guys can make sure to follow him. I mentioned in my live stream the other day that when Arweave pumped 100% in a day, I cashed out some of my position. So we saw a lot of the OG tokens pumping. Not to say I don't think that Arweave can go higher if we see a bull market continuation here. But after 100% pump and seeing all the Dino coins pump, and I mentioned I thought that it didn't seem very organic in that price action. I expected we'd see a pullback. We did. We have seen quite a pullback. We got up to like $8 an hour. We was back down to like $5.60. I did pull some money out of that position. I moved it into XNO. This one that Sistine's been talking about. He was really talking about it a lot in this range right here when we were ranging in the low 90 cents. That's when I entered a position. We have seen a little bit of a breakout here, and the way they're talking about it is it's the payment system for robotics, basically, is how they're framing it. The chart looks good, and Sistine does really good TA. This is a position I have added to, and built a little bit of a position in, nothing crazy though. Okay. And then Sistine, let me pull up his account so you guys can make sure to follow him, because he's pretty solid, man. He does a lot of public calls, so he does have a paid group. But I think just following his X account, I actually have alerts set on for him. He's had some really good calls. Precious metals too, not just crypto. He called silver early, gold early, virtuals early, so he's had some really good ones. All right, let's talk about the one that we are all absolutely crushing it on, guys. And that is, of course, 375 AI. Woo! I just, this was one where it almost felt like just free money for a minute there. They had their token launch. There was a big sell-off because they had airdrops go out. I really started talking about this a lot around the 4-cent range, right around here. It did continue dropping. I kept DCAing, and I kept putting out videos every single day throughout this price action. We saw it get all the way down to 2.8 cents. That's just ridiculous. I've broken this down a number of times. We'll talk more about it tomorrow because I am going to have their CEO on my X Space, my weekly X Space. But what we're seeing right now, and I think this is to be expected, right? As we approach 7.5 cents, we've seen that get rejected in the price breakdown. We've seen this a number of times now. And the reason for that, I was talking about this in Discord with Tyler and a couple other people the first time we got up to that price level. They had a token sale, a public token sale that was priced at 7.5 cents. So people know that, people that bought the dip, I think they're taking profits ahead of us hitting to that point where those, the people that took part in the public sale would be getting back to break even. Okay. So I think people are just kind of selling leading up to that number, that psychological number. I would expect that many of those people would wait to be in profit anyway. And if you look at how many of their tokens are actually in circulation there, it's half of that token sale. So it was 3% of the total supply, which what would that be? 0.03 times a billion. So that's 30 million times 0.5. So 15 million tokens roughly where were unlocked for those original public sale people at 7.5 cents. If we do the math on this, that's about $1 million worth of tokens at current token prices. I would imagine that, for a lot of those people, they're still holding. I don't think they'd sell at a loss. I think a lot of the people that bought in 2.5, 3 cents, they saw 100% gain in a week. They're like, okay, well, we're going to take some profits. I get it, especially leading up to that 7.5, 7.5 cent price. I also think, that original dump that we saw, if we go back here, a lot of this was the people that had the app, and they got the airdrops and they just sold. We see that a lot. People just farm airdrops, they sell. They're going to feel really dumb in the future once the price is way up, most likely. It's hard. They probably already do. But I think once we break through that 7.5 cent price point, if we can flip that in support, then we're in price discovery. I mean, who knows where this thing goes? Currently still under a $15 million market cap, just absolutely insanity. And but again, that's why that 7.5 figure has been such a sticking point and hard to break through. Tomorrow, guys, 11 a.m. Central Time, I am having Harry Dewhurst on for our space. So we'll get on for an hour or so. I do it every Tuesday. We're going to talk about their TGE. He's also got some other stuff, some other alpha that he'll be able to talk about. I'm going to push them, see if we can get any details on any of their customers that they have buying the data. And I think they have some other announcements. So that'll be exciting to have Harry on. Make sure to set your reminders there. I will send out a couple of reminder tweets in the morning so that people can set their reminders and join in. It will be recorded as well if you can't attend live. And that kind of brings me to like where I'm at with the markets right now. I've been very, very vocal, very open about where I've been positioning myself as far as deep in projects go, especially as we've seen the extreme fear. The amount of people that responded telling me that the market's over, the market's dead, it's been crazy. And it has been exhausting. I mean, there are times where, I'm always optimistic, guys. Like I am, but you also have to be realistic. And after that October 10th washout, man, things were pretty ugly there for a minute. Extreme fear, though, has always been a good time to buy, and that's when I was adding to positions. I, mentioned I rotated from some positions that were underperforming, and cut some positions. But 375 AI is one that I went in heavily on. Another one, and I've been very vocal about this one, is Aoki. They're a leader in the robotic space. They've seen, in the last week, a 27% correction here after we saw, a lot of big sell-offs. This thing got all the way down to 1.2 cents. Still, I mean, looking at just under $20 million market cap, that's actually insane. They are working with some really large Chinese robotics companies. So I think Aoki is going to be a leader. I think robotics is going to be one that's going to do quite well once the markets do rebound. So Aoki, 375 AI. You guys know I'm a big holder of GeoNet. This is another one that's seen quite a rebound, 42% in the last week after some really big sell-offs, guys. I mean, this thing got down to just over 10 cents. This is, again, when everyone was super scared. Everyone was so afraid of markets, telling you that it was all over. Market cycle was over. You kind of have to look at the fear and greed index. Sometimes you just need to get off X and kind of touch some grass because it can be really difficult. And this is also true when the markets are up too. Okay. And something to keep in mind if we see a big rebound through the end of this year. Sometimes get off the X timeline, okay, and kind of look at the big picture here. It was really difficult. Everyone talks about how they want to buy when the markets are in extreme fear, but then as soon as it happens, they don't want to do it. This is why extreme fear is a good time to be adding. You see a bounce, 42% in a week. We're still at 1 point, or 16 cents, which is well off the all-time highs that were the, upper 30s. But still, if you do pounce on those opportunities, this is the power of doing so. Another one, Rover. It's not a huge position for me. It's super low cap, and I like the upside potential. I've got some videos I put on that recently. But I took a sizable position in it because I think, you see what they're doing. Fundamentally, they're in the robotics narrative. They are collecting useful data and they're selling it. And they're going to be really necessary for autonomous vehicles. So robotics has been, huge. 375 AI, obviously very solid project. I've talked about it enough. You guys at this point should know what they're doing, but seeing the price, the dump that took place, the fact that their TGU was in probably the worst market conditions I've ever seen. It's why I put out so many videos on it. Because it was literally free money, guys. Like when you're, more than 50% below what their original investors, invested at, and they're locked up for 4 years, like that's crazy. So that is why I kept talking about it. I still think there's a lot of upside from here, but I generally don't buy into projects that just saw 100% pump. That's not normally the best time to be investing in projects, but for me, remaining a long-term mindset on that one, I think it can do quite well. But yeah, man, I mean, that's my thesis here, guys, is that we need to keep an eye on the majors. Obviously we have the macro events that are really leading the way here. Guys, we also saw like Trump and Melania coin pump today. I didn't touch those. There's some rumors, I think, that there could be like digital asset treasuries that include those assets. I'm not interested. I made money on the Trump coin the first time around. back in January. I'm not interested in buying that again. And I think they've seen some pretty big sell-offs. But aside from that, we need to keep an eye on Bitcoin, Ethereum, Solana. Obviously, if they can hit some critical support and we can turn bullish again, we get these events that we're hoping for, like the government shutdown ending, being a major one. That would be really good for markets. I'm not really looking to add too many deep in plays at this point. I did a lot of DCAing over the last few weeks. Right now, if anything, I'm hoping we see bullish structure continue through the end of the year. I'll probably be looking to shape some positions, keeping an eye on the fear and greed index. I'm in Brandon's group. I brought him up several times. I'm going to see if he has any high conviction plays on any majors with high liquidity and maybe enter some of those positions. If he has any really good plays, I've got a couple of like DGen plays that are really small bags to see where that goes. But for now, we see this pretty often. We see a run up in November and December, but we generally see a bit of a sell off second half of December. People tend to sell at year end for tax purposes. So it's something we need to keep in mind for sure. But of course, the fear and greed index is the major thing, guys. I mean, that's the easiest, in my opinion. You're never going to nail the top or the bottom of markets, but I'll say this much. If we're at 30 and below, especially 20 and below, that's generally a good time to DCA into conviction plays. Once we get up to 70 and above, and especially 85, 90, that's generally a time to be DCAing out of positions and taking aggressively taking profits. It's not like rocket science. The hard part, really, in my opinion, is not getting too emotional, and that is the difficult part, especially when the market's up. It's really hard to not want to take profits on something pumped and then rotate it to something else, and then hopefully rotate into something else and just hit. And I've been guilty of this in the past. That is generally not a winning solution. And it's really hard not to want to do, especially when you're researching these projects. You're really excited about our project. And you're like, man, I want to take this profit and get a position in this now. Generally, you look at the fear and greed index. When you're in greed there, it's a good idea to lock in profits, not try to catch the next rotation and get lucky. Make sure that you have some dry powder because there is volatility in this. There will be extreme fear again at some point. That is the best time to be entering positions. And I expect we'll see a lot of volatility over the next few years under Trump. The way that guy tweets, I don't think we'll have any shortage of opportunities. So guys, be greedy when others are fearful, and fearful when others are greedy. And try to remove emotion as much as possible. Okay, that is all I have to say about that. As far as what positions you enter and how much you enter, that depends on your risk tolerance. You need to decide that for yourself. Okay, that's what I got for you now. Again, tomorrow I will have Harry on at 11 a.m. Central Time. I'll be doing a live stream more in depth on some of the macro stuff, get in more of the weeds on some of the deep end stuff as well. Appreciate you all. Have a fantastic evening. Peace.